So you might be seeing a lot about the Federal Reserve right now, and I wanted to break down some of the aspects of things that you might be seeing. So first off, what does the Federal Reserve do? Second, why are people so upset about what they're doing with the interest rates, and how does it affect us? And especially right now, how does that affect us? So first off, what does the Federal Reserve do? The Federal Reserve makes sure that the economy is healthy, and a healthy economy is a stable economy. They don't want to see sharp increases and they don't want to see sharp decreases in the economy. If there's a sharp increase, they will increase the interest rates. That will make it more expensive for people to borrow money. Therefore, businesses and people that will invest in the economy, they will stop buying so much and there will be less competition. Therefore, what could have been an increase will not be quite as much of an increase. On the other hand, if there's a sharp decrease, the Federal Reserve will lower interest rates, incentivizing people to go out and buy, get debt, buy things. So their focus is a little bit of an increase, but not so much of an increase. And so we can kind of see what they're expecting to happen based on what they're doing with the interest rates. Right now, they are not lowering or increasing interest rates. Right now, they're keeping it stable. Now, a lot of people are wanting them to lower the interest rates. And what does that mean? A lot of people are wanting the economy to kind of go higher than what the Federal Reserve wants it to go. If they lower the interest rates, there will be more investing in the market and the economy will go even higher. Now, there's a lot of risk with it going too high because it can go exponentially high. There's always a bottom, but there's not a top. And that's where the Federal Reserve is worried about. The Federal Reserve will make sure that it doesn't go too high. That's called super hyperinflation, right? A recession or a depression, that's when it's going down. Going too high is high inflation or super hyperinflation. We do not want that, and the Federal Reserve is aware of that and they're risk averse from that super hyperinflation. Now, wealthier people, they are wanting a higher inflation because most of their money is in the stock market. Most of their money that they get comes when the market goes up. And so they're wanting that. Most of the people that you're listening to, most of their money is in there. Most of the financial advisors, their money is in the stock market. They are wanting that increase. Now, right now, we're seeing increasing prices in gas prices and things like that. And so as a normal person, we don't want to see that increase. We want to see a leveling out. So the Federal Reserve, they're going to keep the rates stable until they see what exactly is going to be going on. They're not sure what's going to happen. Is there going to be high inflation or is it still going to be going a little bit lower? And so they're going to keep things constant. If you like this video, please like and subscribe. Check out my channel for more. Thanks.